Right, well, let's begin here. Okay, so good afternoon, ladies and gentlemen. Today is Wednesday, August 3rd, 2022. It is just afternoon here in New York City, so let's get down to it. What's going on here? All right, so let me give you guys, first of all, an update. You've already seen it on the Discord. I entered, of course, I've entered IWM puts. I entered the 180, 170 October puts, vertical spread. So I'm long the 180 here, so that you guys know, so that you guys can see. Okay, so here it is, October, right here, 180, 170. All right, small, super small. Okay, I kept this really super small. All right, I'm just legging in. I think that there's a very good chance. Of course, after I leg in, it has to pop for the day, right? Of course, Murphy's law, right? But I do think that there is a good chance that we could see these levels here, like 190 or so. So my bigger orders are saved up for that. All right. Like 190, 191. Probably closer to 191. That's when I'll probably leg into some of the November put spreads. So October, November, that's the expirations I'm looking at. So that's just an update on IWM. Okay, I do think that if right now, we're seeing a lot of talk from the Fed. Not just this morning, but actually also yesterday. Actually, one of the biggest tells was actually from TNX. Yesterday, TNX just did this like ridiculous move right here. That's crazy. I don't know if you guys know, but that's a really crazy move. And I don't think that was just like and it could be the bond vigilantes. Remember yesterday how I said, hey, we're the what happened to the bond vigilantes? Remember how I said that yesterday? I think maybe they came back. I don't know. Maybe the bond vigilantes came back here, or maybe it was like a Fed response. Not sure. Not really sure what this was all about, but that's a huge move in rates. Okay, so I'm also changing the plan a little bit again for TLT. I told you guys for TLT that I'd start legging into potentially some calls. Maybe around like 115 or so. I'm going to drop that a little bit down. And I told you guys that I might be leaning into the trade a little bit. I am not going to lean into this. I'm going to keep this small, okay? I'm just going to keep this small per usual, okay? And I'm going to drop my levels a little bit. I'm going to drop it to like 112, 113, okay? 112, 113. I do think that the Fed right now is, I think they're worried that rates are dropping too fast. The dollar's dropping too fast, and liquidity is entering into the junk bond market too fast. Okay, so they're curbing those expectations. They're already starting to, they're talking about, they're already talking about a couple of more rate hikes. And there are, daily, I think today got on and said that the market has gone way past itself, with its expectations on rate cuts. Perhaps that is the case. In the end, the Fed will follow what the bond market tells it to do, but I don't think I don't think the Fed wants to do that though. The Fed doesn't want the interest rates to fall too fast and the dollar to drop too fast. Okay, and I think they're trying to message it back up, especially the dollar. The dollar is taking those messages of additional tightening. So you see that there's a little bit of a demand for dollars coming back. One of the indicators that I also told you guys to look at was the 5-year Treasury notes. It is dropping. So we are seeing yields further inverting. Actually, let me show you guys what that looks like right now. It's actually kind of startling how much yields are moving right now. This is our 30 and 10. Again, guys, this is what the institutions are looking at. the media doesn't really focus on this spread, the 30 and 10. But I do know this is what a lot of institutions use for their stagflation or recessionary fears indicator. Okay, you get a lot less signals from the 30 and 10, but the signals that you do get are higher quality. All right, and look at this, it's dropping like a rock. Yesterday it dropped again. So again, so that's why I'm changing my plan just from seeing where TNX closed yesterday. When we were doing the high noon highlights, we still had about 3 or 4 hours left throughout the day, and I thought, maybe this is just an intraday move, maybe it will close a little bit higher, but we did not, or will close a little bit lower, but that did not happen. So TNX, I mean, wow, what a move. That is a huge move. And so, again, that's either like bond vigilantism, or it's probably like, I don't know, the Fed, a Fed response. I did post something on Discord too, I think yesterday, the day before, that they're increasing the number of debt offerings. It was like 4 times more. It was like 450 billion versus 100 billion or something like that. So they're increasing the amount of debt, because I think that they noticed that there is a Treasury shortage right now. Okay, so many people have went to cash, and now that cash has become trash over the past couple of weeks, people have been throwing it into treasuries, dropping yields down, causing stocks to go up and mortgages to come down and things like that. And I just don't think that's what the Fed wants. The Fed definitely wants to talk this down a little bit. Definitely, if HYG goes up to these levels right here, I think they're going to try to smack down the market. Okay, this makes credit way too cheap for unproductive companies. All right, and that they have to get rid of some of those unproductive companies, okay, by making it more expensive to borrow money. All right, so I do think if it gets up to here, Fed will pull out all its stops and will start really talking down the market. Every Fed governor will probably get on TV and start talking this down. All right, we shall see. Not a bad place actually to buy some HYG puts. I might consider that here. HYG puts right here. Okay, so we'll see what happens. I am gonna keep an open mind on this. Again, the IWM position, super small, because you never know. This there's about, I would say, very low chance. Okay, but I can't predict the future. Neither can you. Nobody can predict the future. Very low chance that this goes above this, like breaks out above like 192 or so. I just don't see that happening. It could, but if it starts breaking out and closing above 194, I will get out. Okay, I will get out, and I'll just stop buying IWM puts. Okay, I do think that out of all the indexes, IWM potentially could be the strongest of the indexes, because I do think that in June, a lot of, not all, but many of the zombie companies that are in IWM and the Russell, I think they got placed out, and some stronger companies came in. So even if we do see a sell-off in the indices, which I do expect there to be still one more big big drawdown in the market, I don't think it's going to make a new low. That's why I chose the 180, 170. Okay, I've been monitoring that 180, 170 spread for a while. And as it got to 3-to-1 reward to risk, that's when I got in. Again, very small. Okay, small. All right. My plan still hasn't changed really. The big orders are gonna come through either when S&P 500 goes back down to its lows, or once we get to this red line, which we're close. We're very close. We're not that far from this 42, what is it, 4230, 4230, 4200-ish. All right. So once we get there, that's where the big orders will come in, for me at least. That's when I'll lean into some index puts 3 to 6 months out. So that part hasn't changed. It's just right now, I think IWM is at that point. I think it just got to it faster, just because it's got, that I think after the rebalance, it just got a lot stronger as an index. Okay, so I think IWM is just a little bit ahead of itself, and also too, IWM also is very, very junk bonds liquidity sensitive index. It's the most junk bond liquidity sensitive index there is. And so with this huge rise in junk bonds, I mean, we'll see. Now, if junk bonds doesn't have to get to this point, okay, that the Fed might be already trying to talk it down now. All right. I just know that if it gets beyond this point, they have to do something. They have to do something. I know they're looking at this chart. I know they're looking at HYG. Don't ask me how I know, but I just know they're looking at HYG. Okay. They're looking at this. And if it gets past this, I know that they're going to try to talk it down. Okay. That doesn't mean it can't go above. I mean, right now, MSC, I think you said it the best, Fed credibility. Where is that credibility, right? I do think that right now the Fed does have a credibility issue. So, I mean, I think it's a very low probability chance, but there is a chance that HYG just goes past all this too. There is a chance. I think it's very low, but I can't predict the future. Neither can you. There's no crystal ball to this. There's no definites in trading. Okay, it's always a range of possibilities. Definitely is the possibility of it breaking above this, but it's super low. There actually right now I think it's a higher chance of it being talked down now. But I think the higher probability trade is if we just wait for this, wait for them to talk it down here, and then that's when we can start buying some puts on indexes or things like that. So I think this level right here corresponds. I think if HIG were to go up and get up to this level, that's probably around the same time that this will probably reach here, this red line at 42.20, 42.30 right here. That would be quite a coincidence. That would be quite a coincidence if that were the case. I'm not sure. Okay, so we'll see. All right, we shall see what happens. So that is the index. That's the update to my plan so far. Okay, guys. We'll see what happens. Nasdaq. Let's just take a look at the Nasdaq. Let's take a look at all the indices. Nasdaq also running away. All right, but I do think that the levels for Nasdaq are about to come into play here. I think around 13,500 or so right here. We saw a lot of hedging demand come into the market at those levels. All right. So I do think that we might see another round of hedging happening. We saw a lot of tech buying here with institutional block orders, and we haven't seen the VIX spike on any of these pullbacks. Really, VIX has been really just coming down throughout this whole process, and even during some of these down days, VIX still went down. So, which implies that I don't think a lot of these shares that were bought here are hedged. So I think that there's still a very good chance that on the next leg down, we might see all the institutions trying to hedge all at once for all the shares that they bought within the past month or two. All right, and that will probably cause an outsized VIX move. At least that's what I'm thinking. That's what I'm anticipating, at least as of now. Okay, so we'll see. Dow. The Dow is having some problems. It's out of all the indexes, it is, like I said, it is the weakest on the indexes out of the major indexes. It is the weakest, and I think it's mostly because of that yield curve. It's holding down bank stocks pretty much. All right. So I told you guys the 10 and 2 is what's used for to gauge bank profitability. And right now, when it comes to bank profitability, the 10 and 2, I mean, it's still inverted. It's still going down. We're not going to see any meaningful rally in bank stocks unless this literally pops up. It's got to pop up and keep going. And then within like a couple of sessions, bank stocks will just have this huge relief rally, okay? Generally, when you see a huge relief rally in bank stocks, you have to see a relief rally in the 10 and 2, all right? This has to go first, at least for like a day or two, or possibly 3, okay? So a couple days to 3 days, all right? We need to see this really curl up. We're not seeing that. So banks are not going to be profitable if this just keeps going down, all right? Or their profitability, their margins decrease on loans when this goes down. Okay, so this has a very high correlation to XLF, actually, all right? But again, if you want to look at the overall economy, look at the 30 and 10, this does not look good. This does not look good, especially after yesterday. After all those Fed governors start getting on the news and started making announcements on those interviews, that's when this went down, which means they're probably pricing in a more hawkish Fed. Okay, if I were to just by looking at this, okay, so maybe we're seeing a little bit of pullback. Maybe it overshot. Maybe the market overshot its expectation. I think that's very, very possible. Okay, remember guys, that copper versus gold ratio. Copper versus gold ratio though is telling us something completely different. Okay, it's actually saying that no, you know what, rates are going to fall. And again, what is it? Copper to gold times 1,000 has been a good indicator of where TNX or the 10-year yield will go. Okay, since let me go back. How long does it go? How far does this go back? Since around 2006. Since 2006, it has been a very good indicator. Now, yes, this ratio, it doesn't track it, exactly, but whenever this rises, generally, TNX rises as well too. When this falls, it generally matches that, and usually it crosses the line. It actually, if you take that ratio of copper to gold and you multiply by 1,000, it actually does equal the same number as the actual 10-year yield. So when that ratio right here, when that ratio was 1.84 back in March 2016, the TNX or the 10-year Treasury was also at 1.86%. Okay, so it does track it very, very closely. Now, the only reason why I'm just sharing it with you now is because I thought after 2020 it got decoupled. I was like, oh well, after COVID, this thing probably decoupled, but it's not the case. I think what it is it's just more volatile. It's just rates are way more volatile since 2020 than we've seen probably since before 2006. I think that's what it is. And that is where the move index comes in. That's why I always, damn. Hold on, give me 1 second, guys. Let's go back to this one. Yeah, the move index. That's why I think the move index, is very, very telling. And I wish we had more data going back on move. I don't. This is not super reliable. I don't think this is very super reliable. But if we were to go by this, I mean, right when it started coupling was around the time when the move index was low. Okay. And then the move index definitely went up. The move index is the volatility of bonds. All right. So in 2008, 2009, we saw the same thing where it did kind of, there was a little, not a divergence, but it didn't exactly match, as you can see here, it didn't exactly match. And at that time, too, there was a lot of volatility in the commodity space. So that time it was more like the copper and gold ratio was the more volatile version of the 10-year Treasury chart. But I think now it's a little bit different. Now we're seeing way more volatility in the bond market. And so I think the 10-year Treasury rate is now a more volatile version of copper over gold times 1,000. Okay, so I do think that the 10-year Treasury will come down at some point. With the expectation that inflation is going to get lower next year, and also with rates coming down. Of course, now if this starts popping up, all bets are off. If copper or gold just pops up, then yeah, I'm not going to take the TLT trade. But I just wanted to show you guys what the thought process was on why I'm longing TLT, because it is a counter trend move and it is counterintuitive to most people. Most people right now looking to short TLT, and so am I. I'm actually looking to short TLT myself, but I want to short TLT at much higher levels. Okay, TLT I think is a very compelling short. If we can get to around, I think maybe around like the 135 zone. If it catches up, maybe by next year, maybe 135. I think that's a very compelling short for TLT. But right now, until around, let's say, mid next year, I think TLT is going to go up. Until then, have one of these kind of moves. Okay. But again, I'm going to size it a lot smaller than what I originally thought, just because of what TNX did yesterday. Okay, so I hope that's clear. But yeah, let's look at some of our other data right now. TIP, TLT, also our inflation indicator, inflation protected Treasury ETF divided by the long-term Treasury ETF. It did try to gap up this morning, but then it's coming back down. Again, if we see the TLT, TIP, TLT ratio hugging that lower Bollinger Band and just riding it down, I think it's the bond market's kind of tantrum and telling the Fed, hey, hurry up and cut rates. Okay, that would be like a huge bond market. That would mean like the Fed versus the bond market. That would lead to probably further erosion of Fed credibility if that were the case. It pretty much means like the market really doesn't care for the Fed, which will be very interesting. I don't know if that's going to happen, but if it does, that would be kind of interesting. All right. So that's what I'm seeing on that. ZF again. It's coming down, not as much as ZB and ZN. ZF is a 5-year, ZN is the 10-year, ZB is the longer-term bonds futures. Okay, so if this keeps riding down, if this number just keeps riding down all the way through, I don't think that's going to be a huge bid. There's going to be huge bids for the dollar if this just keeps coming down. Okay, if this just pops up, then we're going to see some risk on. Okay, so I think this is going to be very telling, the 5-year Treasury note. Okay, so keep that in your watch list, guys. IVW, IVE, this is growth versus value. It's starting to break out again. It's in this channel, and it might be even breaking out of that channel, upward channel. So again, when this 10 and 2 is going down like this, there's a lid on bank stocks, and the Dow is heavily in. It's got a lot of banks in it. So I do still think that if you are going to go long on growth, just based on what this is saying right here. All right. So that's that. This is the low new highs versus new lows. As you can see, it is making very muted responses. However, I do still think there's one more of this coming up. One more, maybe not as big. It'll be a little bit more shallow, but I do think there's one more sell-off coming. This is the AD line for the New York Stock Exchange. Okay, New York Stock Exchange stock AD line. As you can see, it is on an upward path. Going back to the high lows. If we look at the cumulative high low, it still hasn't curled up yet. I mean, I think. Did it actually go up yesterday? I think it actually went up yesterday. Let me see. Yeah, barely. It went up by 3 points. Okay, so it's starting to curl up, but again, it's not above. It's all these moving averages, and that's my tell that the sell-off isn't. This bear market isn't over. Okay, this has to curl up. This really has to curl up. There's got to be more highs than lows, and it has to be above all these moving averages in order for it to make sense. And you guys can actually do this yourself. Stock charts is free. See, free. I'm not even logged in on my stock charts account, but you can all do this for free. It's a 29 and 4. This is just something somebody on the institutional side taught me years ago. And so it's been pretty accurate. Generally, you want to see this curl up. And we haven't seen it. We haven't really seen it curl up above its moving averages all year. Okay? It's been down or flat all year. It got flat here, but it still couldn't move above the moving averages. And as long as it can't do that, or make actual highs, then no. Then all bets are off. Okay? All bets are off. So, at least for the bull market. Okay? So this coming down like this, I think continuation of the bear market. And so we'll see what happens. And I think this is going to be a huge tell. So when we see this curl up, all right, and then on the next pullback, it makes a higher a higher low. And at the same time, if our junk bonds AED line also does the same thing, when it pulls back, it makes a higher low. That would be a quality buy the dip signal. That's what I call the MOAB, the mother of all buy the dips. That hasn't happened yet. So until that does, I'm going to remain neutral with a slight bearish bias, okay, until that happens, all right? So that is equities. Any questions or comments or rude remarks on equities? Okay, let's get to cryptos then. Cryptos, again, extremely unusual options activity. Well, I wouldn't say, well, I think that's what people call it in the media, right? Oh, unusual options activity. It's not that it's unusual, okay? It's just a very, it's very high volume, okay? It's super high volume, and they're going out all the way to March now, okay? Still March, still same as yesterday. Somebody is still buying those ratio, or somebody's still entering into those ratio, in those ratio spreads. Remember the 3,500, 4,000, buying 1x of the 3,500 calls and selling 2x of the 4,000 calls, okay? I believe yesterday it was the other way around, maybe. I think it was 4,000 to 4,500, if I remember correctly. Was that what our level was yesterday? Hold on. It doesn't go back that far. Okay. Okay. It doesn't go back to yesterday's. But I think yesterday's, if I remember correctly, I'm going to have to go back on the high noon highlights from yesterday and just take a look at this and see where the strikes were. But if memory serves me correct, I believe yesterday's big options orders was the ratio 4,000 to 4,500. Right now we're seeing ratios being bought on 3,500 to 4,000. Okay, you could tell because it matches up exactly in the same time frame. Okay, it matches up in the same time frame. It's literally done at the same time. All right, and so whoever's doing this right now is collecting about $500,000 to have a mildly bullish position. So even if it fails, they're going to still make a couple $100,000 per position. But if they, but I guess their max profit happens when it gets to either that short strike, that 4,000 or that 4,500 by March. Okay. But again, millions of dollars are pouring into this, and time intervals too. Millions of dollars, literally like these options orders, like on the long side, it's like 2.5 million, and short side of 1.5, 1.6 million. So somebody big is doing this, and they keep doing these ratio spreads on the call side. All right. So it's a mildly bullish bet. And they're doing it for a credit because right now, ETH has a pretty inflated implied volatility, and they're able to capture some of that they're able to really capitalize on that higher implied volatility as well as express a bullish position at the same time. So whoever's doing this is definitely getting very bullish for March 2023. I think it is an institution just because of how long dated it is. And they're that's what I see so far. That's where all the action is right now, is in ETH. As far as the options market is concerned, actually, let me see if we're seeing any. Are we seeing any action in Bitcoin? Not as much. See, Bitcoin, the notional value just keeps coming down. Retail. Buying calls, and see they're more short dated. Oh, I do see some March 2023, but as you can see, the other strikes are all short dated August 12th, right? I think this is just very, very retail dominated. But ETH, for some reason, I think ETH very institutional. All the institutions are getting involved. Look at that! Wow, look at that! Block trades taking over. Very little trades. The retail, very little. Institutions taking over, all right? And they're buying calls. Okay, they're buying calls and selling calls at the same time, but they're expressing bullishness, mild bullishness. Okay, for March 2023. All right, let's take a look at the March. Oh yeah, see that? See that? Look at that. I mean, these guys are putting math in their favor. Look at that. Yes, the skew is slightly tilted to the back, but we see that there's still a decent smile on the forward end of the strikes. Okay, there's a decent smile here. Okay, they're definitely taking advantage of this right here. This phenomena right here, they're taking advantage of that. They're putting the math in their favor. Good for them. All right. Say that again. Yeah, a lot of them more look like this, right? Behind, exactly, right? Remember how we were noticing all of this? Yeah. So somebody on Discord just mentioned that these a lot of these future dated options expirations looked a lot more like these kind of smiles. Okay, probably, yeah, you're right. Probably more something like a shallower smile, but still very backwards. But now we're seeing more and more on the call side. And again, that's where these institutions are really taking advantage of that. I think they're putting the math in their favor and selling 2 calls for every one call they buy, because calls are super expensive right now. But I think the institutions are just piling in on the long side. So now the question is this: what happens once we get to those levels? What happens once we get to the 3,500, 4,000 zone? Are we going to see a sell-off because all this profit taking in calls? Time will tell. But if you guys are going long, that level may not be a bad place to start taking, some money off the table, taking risk off the table and protecting profits. Okay. If we get our, if one is to go long, for me, I need that long signal, that ETH to gold has to touch that red line for me, and I'll go over that at the very end. But if I go long, I'm definitely going to take some money off the table once he starts getting into that 3,000, 4,000 zone, because I do see all these calls being built up in March. And so I do think there's going to be a little bit of profit taking. So we'll see. But that should be very interesting when the time comes. Okay. And that kind of goes with our thesis as well, our TINA thesis. Remember how we said that, in QE era, there was TINA, there is no alternative. Cash was not an alternative. Bonds were not an alternative. So people just kept piling on into risk assets during QE era, which is 2008 to end of 2021. Now, though, there is an alternative. Cash, dollar is in an uptrend. The 10-year Treasury yield is decent, high 2s, low 3s, and that creates an alternative, okay? So I don't think, even if we do see an extended rally for most of 2023, I don't think it's going to be like a straight line rally. I just don't see that happening, okay? I think it's going to, especially in the crypto market, I think there's going to be a lot of choppiness in the crypto market. Now, in indices, I think that's going to be a little bit different. I think in U.S. indices, we may have a 2017 style year, like a rolling bull market. Just because I think different sectors will attract money at different times. And so we'll see this rolling kind of very low volatility climb in 2023 on U.S. indices. But as far as the smaller asset classes and more riskier asset classes like crypto, I don't think it's going to be like that. I think crypto is going to have a little bit more of a choppy uptrend, if it even has an uptrend in 2023. It will be choppy though. That's just from what I'm seeing, just from the options positioning. Okay, options positioning looks a little bit different on the U.S. indices though, but it's starting to look very similar. I mean, it was very similar before all this March buying. I'll tell you that. Right now, in the S&P 500, the September is the monster options expiration, whereas in options we're actually seeing it on December and March, and also too with U.S. indices with the S&P 500, it's mostly in puts. These are in calls, so. we're starting to now see a little bit of a difference now. But just like institutional behavior, we're seeing the further dated options get a lot more activity than the closer dated ones. All right, closer dated is usually like retail. All right, retail or usually if it's closer dated, we see a lot more puts because it's closer. It's short term hedging, and institutions do a lot of do a lot of short term hedging. That's something they do on a regular basis. But that's not what we're seeing here. Usually it's like call buying. That's usually what we've been seeing in ETH at least for the past couple of weeks. All right. So that's just what I see here. Let's see if on the short end, let's take a look at March. I just want to take a look at the March contract and see if we can get anything else out of this. Deribit never saves your. Oh, it does have volume. Okay, good. Yeah, look at that. Oh, wow, look at this. Look at that OI right here. So yesterday that they were working I think the 44,000 4,500. Now they're working the 35 4,000 on the call side. Let's see on the put side. Put side, yeah, it's pretty much dead until you get to like 1,600 or so. I wonder if that extra premium here that they made, you remember how I showed you guys that extra premium they made on that ratio, the $500,000-$600,000 per spread? I wonder if that money is just getting put into some puts here to hedge. I have to do the math and see how much money does that equal to. And if it equals the premium that this trader earned from the ratio, then that's quite a position. So that's a mildly bullish with that put out the money put hedge that's paid for. And as long if it just if it does nothing and just flatlines all the way through the March, everything just expires worthless. It was just a free position for them then. That'd be interesting. That would be very interesting if that were the case. I have to do the math. I have to, Deribit, that's the problem with Deribit. They don't show you anything past 24 hours, unfortunately. Well, at least if you're not an account holder. And as an individual in the United States, I cannot have an individual account. So I don't know. Some of our European friends out there, if you guys are listening, maybe you guys can download a Excel spreadsheet for me that has like multiple days worth of options data. I would definitely appreciate that if some of you guys have Deribit accounts over there in Europe. If you can export that to a CSV file, I'd definitely love to take a look at that. But unfortunately for me as an American, I have no access to that. I only have 24-hour access. So that would be nice to see. But if that matches up, wow, what a position. Whoever that is, I commend you. That's a damn good position. Okay, but maybe after I get a entity account, maybe I can start trading on Deribit. We'll see. Okay, anyway, I digress. I'm getting off topic here. Let's go through any questions on the crypto side. Oh, BZ has a Deribit account? Okay. Oh, yeah, that's right. He does. Yeah, maybe we can ask him. Maybe we can ask him to download a CSV file for us. That would be great. I think he's on the other side of the planet, though. I think he's in Asia, so he might be asleep right now. So maybe when he wakes up, I'll ask him. But yeah, any other questions on crypto or anything? Any questions? Okay, let's run through the plan. Let's run through our positions and plan and our indicators just one last time, okay? Since we're on crypto right now, let's go to our crypto charts, okay? So crypto, again, ETH and Bitcoin, I'm really monitoring that ETH to gold and Bitcoin to gold ratios. I'm going to buy when ETH to gold ratio gets to this red line. You can copy this red line. This red line goes all the way back to 2020. It's the 2020 uptrend, okay, from the 2020 lows, from the COVID lows. It's the uptrend for most of the year. You connect you connect those points, you connect that trend line, and it magically, coincidentally, or whatever you want to call it, touched right here on the June lows. Okay, I think this is a level where I do think institutions are looking at this. Okay, I think they are making decisions, long-term decisions based on this chart. So we will as well. We follow where the money goes. So when it touches this line, definitely getting an ETH. Also, same thing with Bitcoin. Here, it's a little bit further, but if it gets there, I'm buying. Okay. What else is in our plan? Yes, the dollar. Right now, everything is centered around the dollar. The dollar is approaching its 18-day moving average. The euro, okay, has it lost it? Oh, it did lose it earlier today, but I think it's actually regained it. 101,526. So, okay, so right now it's above the 18-day moving average. Before I started the high noon highlights, it was before. If this starts going down and if this starts closing down below the 18-day moving average and going down, expect a lot more volatility, especially from Europe. I think if this goes down, okay, if this starts going down, we may actually see certain patterns where during the overnight and morning markets, we go down, but then after Europe closes, the market starts drifting up again, okay? We may see that if the euro starts dropping really hard, okay? So keep an eye on this, okay? It's one of our 4 indicators. Remember, the dollar, the euro, junk bonds AD, the New York high low, and also our ZF, our 5-year Treasury note futures, okay? So that's part of our indicators, all right? Speaking of indicators, speaking of ZF, let's just take a look at the ZF. If this starts going down, dash to cash. If this goes up, cash is trash, all right? Down, dash for cash, dollar will go up, risk off. This goes up, cash is trash, risk on, okay? I think this is going to be very telling, all right? What else? The other positions that I opened today, I opened IWM today. So again, my plan for IWM, I'm going to I just legged into this, guys. Okay, legging in. I'm a little bit down on this trade right now already. How down am I? I'm down already. So, but it was super small, super small. I only bought like a couple spreads. I'm planning on, just to keep things in perspective, I'm probably going to buy like 50 to 100 of these different spreads. Right now, I'm in the single digits still. So it's super small position. I'm going to leg in. I'm going to leg in more of these once it gets over 190, 191. That's when I'll start buying more. Hopefully, the November contracts will be a little bit cheaper then. So I am in these IWMs, okay? When it comes to SPY, all right, and the rest of the indices, I think probably about around the time where IWM gets to 191 or so, most likely the ES and other indices will be on their downtrend line. Okay, so again, if it hits this, I'm going to start buying SPY puts 3 to 6 months out right here. Okay, so that's around 42.30, 42.40. That's where I'm buying 3 to 6 month put verticals. I'll try to see what strikes I choose, but of course I won't know until we get there, and I'll let you guys know what I choose. If we close over 4,300 for 2 or 3 days, that means it's over. Okay, then I'm out. I'm out of all those puts. Okay, so that's the plan. So that plan hasn't changed on SPY or on the S&P 500. For buying SPY, long-term buys, again, I'm going to start scaling in when we get to that 360 zone. I'm going to save most of my share buying for 342. But if SPY goes under 340, I'm going to buy 1 year in the money calls to supplement that position. Okay, so that is my plan for the indices. All right, TLT. I changed my plan in that. I told you guys that I'd be leaning into that trade. I will not be leaning into that trade just because of what I saw on TNX yesterday. I will be waiting a little bit lower. I was going to get a little bit aggressive in buying calls around the 115 zone. I've lowered that. I'm going to start buying maybe around the 113 zone, 112, 113, and I'm going to keep the position very small, all right? Later on, I do think that TLT is going to be a short, but I'm going to start shorting probably a little bit higher, around the 130, 135 zone. I'm going to short, okay? But if it goes down, I may venture into a long, and again, that just comes from our copper to gold ratio that we have. Copper to gold has been a very good indicator of where the 10-year Treasury will go. It's still coming down. So I do think that the 10-year Treasury, maybe after some rounds of volatility, it may come down to. Bonds move a little bit slower. See, bonds, sometimes it takes a while for it to notice these things. Like, for example, when the copper gold ratio went up, I mean, for TNX, for TNX to get to those levels, it took like what, March till April, it took March of 2021 to April. So it took like, 7-8 months. Actually, no, more than a year for it to get caught up. So it's not unusual for bonds to take a lot longer to move. Okay. So again, that is why I want to be a little bit more patient on my TLT trade. All right. So that's TLT. Some of the stocks we're looking at, HUT. I still have the alert at 165. From 165 to 150, I am a buyer. Ford, I am a buyer. Once we get lower, I still think we got one more big drawdown left in the year. So that's why I'm trying to be patient, although I am feeling that FOMO like everybody else. But $13, I ended at $12.95, $12.50, $13. That seems like a good level to enter. And I will scale in with shares at that point. I might even buy some leaps as well too. Okay. Some of the other positions that we're in, DIA. Yep, still in the October puts, still in the 300, 290. I have until October for these. I'm still in the same EWT Taiwan puts for December. All right, that's the 49.40. I'm still in the FEZ put spreads for November. That's the 32.27 put verticals. Although if the euro drops under this 18-day moving average, holds that for 3 days, and FEZ keeps going up during those 3 days, after that third day, at the end of that third day, I may leg into some more puts on FEZ. Okay? Again, let me repeat that because that was a mouthful. 3 days. If the Euro USD closes for 3 days under its 18-day moving average, and at the same time FEZ keeps going up, at the end of that third day, I will scale into some more FEZ puts. Okay? So that's FEZ. All right. I'm still in. I went over IWM already. UVXY. I'm still in UVXY. I still think that we're going to see an outsized VIX move just because all these institutional shares were bought about a month or two ago, and I think they are under hedged. And when all of them want to hedge all at the same time, I think we're going to see a big VIX spike. So again, 1424s, and I'm also long the 1520s on the call side. Okay. So that's it. That's the plan. The indicators. And my current positions. Boom. Checkmate trading, baby. All right. Any questions, comments, rude remarks? This is your time. Oh, I see somebody voice chat. Why not sell a cash covered put on F at 13? Valid. That's valid. I just think there's more juice if we wait. We're going to get more juice if we wait. 13 put. I mean, look, you're making 6 or 7 cents for August. That's like what? 4% in 16 days? I mean, that's not bad. Okay, that's not bad. That's not bad. That one's more like, yeah, wait. 6 cents. Did I say, was it 6 cents? Yeah, so 6 cents, that's like what? 1% is 13. That's like half a percent. And what is this? A little bit over 1%. I mean, there's just not a lot of juice in that. And if it does fall, you know, which I think it will. I just think that there's going to be one more big pullback in the market. And when it does, I just want that buying power available instead of being stuck in those short puts. I want to have that buying power available to buy when it gets under that 12. So even for September, I mean, if we sell the 13 cash secured puts, that's what, 1777? Oh no, I'm sorry, 1277. 1277 is our buy-in price. I think it could potentially go down lower than that. Okay, so I may sell. I think selling cash covered puts is a beautiful thing. It's just I don't think this is the time to do it yet. Okay, generally too, you want to see that volatility lower. I think selling cash secured puts was a good thing to do. Probably when this spiked for the ER, when IV spiked. IV is this blue line right here, when IV spiked here. But now that IV has gotten down a little bit, I want more juice. I just want more. It leaves you wanting more, okay? It's such a mildly bullish position. When I get bullish, I want to get really bullish on Ford, okay? I really believe in Ford. So there's a very good chance that Ford could see like under $12. Yeah, doubt it, but it's possible. It's possible, okay? And so I definitely want to have some dry powder to buy that here. But I will start scaling in maybe around here or so, under 12, under the high in the high 12s. Maybe, I have an alert for 12.95, but maybe around here, 12.70, 12.80 or so. Start legging in, and then here if it bottoms out here and it looks like it's gonna bottom at around like $11 right here, that's when I'll buy some leaps, some low delta leaps, okay. And I'll go over those low delta leap strategies and why they work so well when they do. I'll go over that when the time comes. That's a math lesson right there. And we have to go over like Black Scholes and stuff. So we'll save that for another day. All right. Hope that answers your question, Mitch. Any other questions, comments, rude remarks? Going once. Going twice. All right, sold. Okay, that concludes our high noon highlights. Thank you for joining us. I know you could be anywhere else in the world, but you're here with me, so I do appreciate that. I will keep our Twitch stream up as always, so you can see the data and the charts that I stream. And we'll be back at it again tomorrow. I'll hang around in the Discord for a bit. So if you got any questions, holler. Okay, have a great day, guys.